Hey everybody, it's Monday, and that means on Gold Silver Pros, we're going to be talking about mining stocks. It's November 15th, 2021, beautiful day outside, and we're going to bring in an update on three of the mining stocks we've covered on the channel that you guys have been asking us about in our social media, in our chat, and of course via email. But to start off the presentation, we're going to talk about why there are several factors that you may not be aware of in the supply chain that are affecting your ability to get the end goods. And of course, I'm going to relate it back to the mining process and the refinement process. And we're going to explain why it's important to get involved as investors in that part of the process and to understand it, because at the end of the day, the supply chain shortages will not be resolved unless we deal with the very beginning of the cycle. And those are the hidden factors of the supply chain that they're not talking about anywhere in the news. So in order to do that, we had a video yesterday, a whiteboard session where I got up on the whiteboard and I was explaining this. I'm going to do a short excerpt from that presentation, and then we're going to talk about why that's important, and then we're going to give you three targets in the mining space if you're interested that deal in the precious metals. So let's go ahead and get started with the share. Here's the video that we had out yesterday, how to deal with shortages caused by rampant inflation. It's going to be a 3-minute segment where I explain this section right here, what we don't see: the exploration, mining, harvesting, and refining. So this is what we see, but there's a whole part below the surface that you do not see, which is even more important and even more neglected in today's day and age. So down here are the three things we don't see. It starts with exploration, which I'll explain here in a moment, mining and harvesting of goods, and then refining that into a product to which you could actually ship to a consumer. These are the three main steps, and within each of these steps are sub-steps broken down. I'm not going to go through those on the video. We just need to know the three main ones. Exploration, what is that? It's paying companies to go out and find stuff, whether they're finding the next batch of trees that they're going to cut down for lumber, or whether they're finding the next tin mine, or lead, or lithium for batteries, or whatever the case may be. They need to explore. Or maybe they're exploring for new farmland with which to grow crops that they're going to harvest. So you either, all the elements, the goods that go into shipping a final product have to come through step 2, which is mining and harvesting. Once you explore and find it, then you either mine it out of the ground or you harvest it out of the ground. That is the only way that we can get natural resources. Without natural resources, we cannot have refining. Without refining, we don't have products. Nothing comes to port, nothing gets on the truck, nothing gets to the warehouse, nothing for you to buy at the store. And this is completely true. One of the reasons why there's an underinvestment in exploration, mining, and harvesting right now, well, there's two main reasons. One, the media tends to demonize the mining and harvesting process and say that it's harmful to the environment. That, to some extent, used to be true. However, a lot of the mining companies now have very robust ESG programs, environmental and social governance, and they're working with the government on those programs, and they're adhering to them, and they're becoming very safe. They're not polluting the environment as much. They're including the locals on their work teams and providing local labor and local jobs. So they've done a really good job in this industry. So the thought that mining and harvesting is overly harmful to the environment or overly harmful to the local populations, whether it be people or animals, is no longer as true as it was 20, 30, 40, 50 years ago. But nobody knows this because the messaging hasn't been there. But we speak with these companies on an everyday basis, and we look at their programs, and we've been to mine sites, and we know this. So not enough money going to exploration, not enough going into mining and harvesting. The second reason money's not going in is because there is some risk involved in exploration, and people aren't spending money. In a Kiplinger study that I looked at recently, the millennials were credited as being the smartest group of investors. They do more research, okay? They look at more sources, and they're very smart about finding what they want to invest in. But they don't take enough risk. They don't take enough risk as the previous two generations, my generation, Gen X, and the baby boomers. So they're not putting money into riskier ventures like exploration. There's no money in exploration right now, or very little money. And so companies aren't going out and finding the next batch of resources that they need to refine to then put into product to get to the retail shops. And then refining. A lot of refining companies are coming up. Okay, we're going to go ahead and stop it there. But that was from our video on Sunday talking about the three hidden pieces of the issues that we see in the mining, in the supply chain cycle that have to do with exploration, mining, harvesting, and then refining those products. Those are very important. So you can't solve the lack of product problem. You can't solve the container issue, the shipping issue, the port issue, unless you have enough goods for people. And there aren't. Now, a lot of people would say, Rob, there's a lot of container ships sitting outside of LA ports. Is that all the goods we need? Well, that is some of the goods we need. Certainly a lot of the seasonal items that are coming for Christmas and so on and so forth. However, we know by looking at statistics and articles I've written over the last 12 years that have been syndicated across the internet and that we've talked about for the people that have supported us on the website as subscribers and even on the YouTube channel, I've talked over and over about how we don't have enough base resources, not enough base metals, not enough minerals, not enough of the precious metals to meet the demand that is coming. We've talked about the supply cliffs. We've talked about how we're not finding as much easy to get oil and the negative rate of return on oil. I talked about that at length for those of you that support us via Patreon in our weekly last week. So we know that, yes, we see the immediate problems in the supply chain now with the shipping and the ports and stuff. But what no one's talking about is that big looming issue with all of the base raw goods that we need to make products is also a major, major issue. And a lot of it has to do with people investing at the one end of the market and everybody going for the momentum stocks through the passive investing and bidding up, the Teslas of the world, the IBMs of the world, those companies. And when I spoke recently at the New Orleans Investment Conference at a private event that we held, I asked, we had investors and companies in the room, a lot of people, very smart people involved with the entire process, start to finish. Many of them own businesses where they produce products and goods. Many of them were investors at various stages, and some of them were companies that were producing the products. And I asked the question, I said, why are people only investing in one end of the spectrum? And they said, specifically with the millennials, the new money that's coming in, that $63 trillion of millennial purchasing power over the next 10 years. It's going to be the biggest purchasing power of any generation in US history. And there's 2.1 billion millennials in the world right now. They're the most powerful generation. That generation doesn't want to invest at the beginning of the supply chain, the exploration and mining and harvesting, because they're like, it's too much risk. I'd rather go for these momentum stocks. And you see companies like Amazon hiring a few geologists, and people are thinking, investors are thinking wrongly, that Amazon can then back manage the entire supply chain from start to finish. And we're finding out that's not the case. Amazon can't do it. Tesla can't do it. They can't. They cannot manage it from where they're at. When you talk about vertical integration in the supply chain, that process only goes so far. The companies producing the end products, 99% of what they do, 99.5% of what they do is focused on getting, after you get the raw goods, and then making that product and then marketing that product. Okay, about anywhere from 13 to 20% is spent on marketing, just advertising to you to get the product. They're not investing the hundreds of millions and billions of dollars we need into exploration, refining processes, mining and harvesting, those first three super important steps that I talked to you about in that video. So you cannot manage the entire supply chain from one end. You need investment at every step in the way, and you need specialized companies that handle those processes along the way. And that's why on the channel on Mondays, we talk about this. We talk about the hidden part of the supply chain. And it's not the trucking part. It's not the shipping part. That's the part that right now is having issues that's in the press, because it's what you see. You see the containers sitting outside and you can't get them. But what they don't talk about is the lack of resources that we need to support our lifestyle. And further, last point I want to make on this before we talk about the three stocks that I want to preview for you guys, or review for you guys, is that China's middle class is emerging. And China has stated that they want their middle class to self-support their entire economy. It's not that they're expecting the US to buy all their goods now. They want their own population to buy their goods. Well, as that billion plus people starts buying more goods and coming into the middle class, most of them which are not in the middle class right now, it's going to make the demand coming from the United States and Canada, over here in the West and some other Western nations, dwarf or pale in comparison the amount of raw materials they're going to need to produce the products they want to live that Western lifestyle is going to be absolutely immense. So the problems don't just exist with the current shorter term issues in the supply chain, the trucks and the ports and those steps. It actually goes all the way back to the very beginning. We need to find more stuff. And to do that, we have to finance out these exploration companies. We need to have the refinement for that, the harvesting, and then the refinement to the finished product that you can put on the ship that comes to the truck or the rail and eventually gets to you at your destination. Not only here, but in these burgeoning economies in China, which is about to become a major economic superpower. They're already #2 in the world, and they're going to surpass the US in a few years. And the amount of demand coming from that is going to make what we demand here in the US look like nothing, okay? So it's important, going back to that research study that I quoted from Kiplinger's, the millennials only invest in one side because they don't want any risk over here. They're not taking risk. And what they're getting is a bunch of paper value and momentum stocks. And we think when that thing crashes, all the money is going to flood back to the other side of the supply chain in real goods, okay? Real base metals, things you can hold in your hand, real precious metals. That part of the supply chain is going to get a lion's share of the investment. Right now, the new generation and even some of the older generations are not investing there as much as they could, but that's where the money's going to flow. So what you want to do is get in on that end of the supply chain first, get into the explorers and the miners and harvesters first, and even look at some refining companies. Hey, because we definitely need the refiners and the end product producers, you know, to get those products done. We need those as well. So look at that entire part of the supply chain. That's your value investment right now. And if we don't do it, moving beyond an investment perspective, we're going to have even more severe shortages than what you see now. And it's pretty soon there are going to be shortages where there aren't cargo ships sitting out LA ports. There are no cargo ships because there's not enough goods. And then you're going to have port workers and truckers that built up from this current issue in the supply chain that aren't going to have jobs because we simply are not going to have the products to put through that part of the supply chain. And that's the problem that we're having. And that's why I keep advocating that we look at that. One, because it's a value investment. And if you hold this, you find good companies and you hold this, that money's going to flow from one end. It's going to flood all the way down here when these financial problems get worse. And also, not only that, as the demand for these products continues to go up across the world, specifically at Chinese middle class, but as the world population grows and more people want those finished products, it's going to draw so much, put so much pressure on these explorers and on these miners and harvesters to get more stuff, that those are going to become so scarce and so valuable, okay, to society. So this is where you want to look at supporting this now, and also looking to take your positions before that occurs. You don't want to buy high and sell low. You want to buy low right here and sell these high investments that are overpriced. You know, we talk about P/E ratios of the stocks being way too high, and of the miners and of the exploration companies being too low. You want to invest low for when that switches, that paradigm shift happens. You're invested here, not here, and this crashes down and this moves up. That way you're making money. This is how you make generational investment. And that's why we talk cycle investing on the program. Okay, I've harped on that thesis enough, but it's a thesis that is proven out over time, generationally, dating back hundreds and hundreds of years. We believe in that. And so without further ado, let's look at updating you on the 3 mining companies we had covered before on our channel that we think are potentially good targets for you. Of course, do your own research. This is a part of your research, but do your own research. So we're going to get into the share, and we're going to take a look at the first of those companies, which is Abra Silver Resources. Now, I like this company because I think they have some good targets. They're operating in Argentina and Chile, both good mining districts. Actually operate in the best district in Argentina, which is one of the best districts in the world, as ranked by the Fraser Institute. A lot of people don't know this. And they also operate in Chile. Chile is one of the richest nations in South America, very stable political environment, a really good country. And actually what I want to do is go down and visit the wine country. I was speaking with one of my friends last week, and we're talking about various wine countries around the world. And I want to go see that area of Chile, which grows some of the best wines. I think it'd be really interesting. So looking at this chart at Abra Silver Resources, they've done pretty well. This is just a year-to-date chart, so they've done pretty well. Of course, they spiked in May and June. You're going to see this a lot with the mining stocks. As the gold and silver price goes up, so too the mining stocks. So as we've had a little bit of pop recently in the gold and silver price, they're coming back up. So they are leveraged, that gold and silver price, even if they're an explorer. That's what happens. But at the end of the day, don't worry about short-term price movements, because when you're getting into exploration, you're not in this for just a few months. This isn't momentum chasing a stock or day trading. You're in this for the longer term to get leverage gains, potentially a 5 or 10 or 20 bagger, depending upon the target. Abra Silver will do, should do better over time as they explore the resource. This is normal for that. So I don't get scared off by this. I see this and this and this, these low points, as entry points into when I want to add stocks. Okay, this is when I'll buy the stock here, here, and here. I don't buy it here. I let it roll up here and then start to come down, and on the dips, I'll identify those as best as possible. And dollar cost average in at the lowest point possible. Again, buy low, sell high. And if your thesis is correct, my thesis is correct, that all this money is going to flow down to the left side or the beginning of the supply chain, and particularly in those companies doing the precious metals, I want to get in now and hold those positions. So let's talk about what's going on with Abra Silver. They announced the filing of an NI 43101 technical report for increased mineral resource estimate at 𝙊𝙊𝙇𝙊𝙍. Okay, a 43101 is a technically compliant, there are regulations around this report, technically compliant report for estimating resources, so that we have some confidence that the resources are actually what they say they are. This is put forth by the regulators. They're saying that as of September 15th, they're measured and indicated resources. This is measured and indicated is the primary category you're going to see reported. Sometimes they get further up into reserves and proven and probable, but that's when you get the older mines and they've done more and more drilling and exploring. But measured and indicated pretty much is the silver standards, so to speak, when you're looking at resources. So they have an updated to 1.0 million ounces of gold. That's good. That makes them a good sized gold producer, and 90.2 million ounces of silver. So either one of those on either side would be a potential good investment, 1 million gold or almost 100 million ounces of silver. They have both. And further, it's a 37% increase in the contained gold ounces and a 12% increases in the contained silver ounces. M&I Resources, 160 million ounce silver equivalent at 121 grams per ton silver, or 2.3 million ounces gold at 1.73 grams per ton gold. So if you equivalate those, so if you turn silver into gold equivalent at prices or gold into silver equivalent, you can measure it that way if you want to do it that way. But remember, they have both gold and silver. And the high grade resources in the measured category, 8.2 million tons at 193 grams per ton silver, or 2.7 grams per ton gold. Those grams per ton tell you how many grams per ton of ore that they have to produce, or rock that they have to produce, is going to provide that gold and silver. And the higher that number, the grams per ton, the more profitable it is per the cost of mining that, the more profit they make. So you want to see higher numbers there. And they definitely have really good numbers when compared with industry averages for companies that are doing this. So good news there. Another piece of news that I wanted to update you on, they're doubling their phase 2 drill program. So on the back of this great report right here, the fact that they're 1 million ounces gold and 90.2 silver, they said, hell, let's just double our drilling program. So, and this is in the Salta province in Argentina. The expanded phase 2 drill program will consist of approximately 20,000 meters of diamond drilling with 2 rigs, and is designed to further expand the existing mineral resources. Diamond drilling is considered one of the best types of drilling because the diamond in the head and the way that you can drill it efficiently and get the best results and do it at all angles and things. So they're using the best drilling known to get get those resources. And to date, the company has completed approximately 7,400 meters. So we're about now a third of the way through that they've updated this to 20,000 meters. And the program is targeted to be completed in the first half of 2022. Well, what's going to happen between now and 2022? Lots of news of drill results. So what should happen to the stock? As we think we're in a positive gold and silver environment and they get drill results, it's going to go back to doing this. It's going to go back to doing that. And you'll see that in the exploration stage as they're discovering the resources. And when it goes up on good news, great. It's great for your shares. It'll come down until the next good news. Buy. And then it goes up again. And as your dollar cost averaging in the lower ends, okay, then you're making money on the way up. And then over time, the chart will look like this. It'll up and down until it goes up until the point that they're ready to make that mine decision. That's the typical way that stocks respond in the life cycle. So here's their targets that they're looking at, and here are some of the drill hole results. I'm just going to put it up on screen. You can pause the video for a minute to look at that, and I'll let you guys follow that. And of course, you can find this on their webpage. Further, the most important thing in a mining company is management, in my opinion. It's not just the drill hole results. It's not just the jurisdiction. It's who's running the show. So they've strengthened the board with the appointment of Stephen Gattley. I want you to listen to this gentleman's experience and who he's worked for before when you talk about whether Abra is actually going to be able to get the job done here and find a good resource. He's a mining engineer with over 40 years of experience in the minerals industry. He spent the early part of his career working for Rio Tinto. Is that a name everybody recognizes? Initially in the Cornish tin mines before holding senior positions with Rio Tinto at underground base metal mines in both Europe and South America. So this gentleman knows what he's doing. The latter part of his career was spent with Lundin Mining Corp. How many of you are aware of the just outright success, serial success that the Lundin Mining Corp has had around the world? He served as a general manager of the 𝙂𝙊𝙇𝙿 lead mine in Ireland. Moved from mine sites to a corporate role, he held the position of Vice President Technical Services. So this gentleman has been all over the world. He's been base metals and precious metals. He's worked for some very well-known and respected families and companies. So that strengthens Abra's management team and their ability to find the resources, outline those resources, and bring them to you. That's positive. All right, now we're going to move on to Benchmark Metals. Benchmark does their mining in British Columbia, Canada, a very good mining district. Here's a year-to-date chart. Same, a little bit of fade that we see here because the gold and silver kind of fading out, and then it will go back up as the gold and silver prices rise. But overall, buying point here, buying point here, buying point here. Why? Because we like Benchmark, and let's discuss why we like them. They have updated their feasibility level engineering work. They're pleased to provide an update for the engineering and technical work to support a feasibility level design. What is feasibility design? Feasibility is when you've done a whole lot of exploration and you're getting to the point where you want to figure out how much is it going to cost and how much are people going to make off this bad boy. So they're a little bit more advanced than Abra Silver in the mining life cycle, a little bit farther along on Pierre Lassonde's Lassonde curve, if you will. You know, still good potential investment here, but a little bit more known about them. So they're talking about doing feasibility. And we're going to talk about their, let's see if I can find it. We'll get to the drill results in a minute. We will talk about their timeline here in a moment. Benchmark is currently drilling 7 PQ and HQ size multi-purpose holes in the Cliffs Creek deposit and the AGB deposit totaling 2,450 meters. Okay, so they continue to do it, and they say the company is focused on completing all the necessary engineering work to establish Canada's next gold silver mine, because there's been such a heavy focus on fast tracking to construction decision and defined exploration windows. The company has been steadfast in maintaining a detailed overall project schedule. In other words, people want them to start getting it out of the ground. Why? Because silver's already hit the cliff and gold's going to hit it in 4 to 5 years, and they want the next gold and silver mine out. I'm telling you, the demand for the precious metals is so strong right now. Everybody wants any company that has any resources, fast track. So here's their timeline. They're already in, they've already done the preliminary economic analysis, which is this, we think at the very beginning, going to be cost effective to do? They said yes. So they went into a deeper set of studies, trade-off studies about, you know, which one should they do, and if they did this versus that and how to do it, which has led into their feasibility study, which is a more detailed report on whether this is going to make money. They're going to continue to do site execution programs, metallurgical test work, which is figuring out what is in the ground chemically and from a resource perspective. They're doing their environmental baseline programs to get their environmental study ready for the government so they can get those permits. So all of that is going on. So they're a little bit farther down in the exploration process, but still further enough left on that Lassonde curve. There's a lot of meat left on the bone from a value perspective. They discovered in their drilling program new copper, gold, silver potential and complete over 41,000 meters with 6 drill rigs. So we saw 2,400 meters in the last report. Now we're talking about the bigger drill program, 41,000. It says here that they're pleased to announce that more than 41,000 meters of drilling have been completed with 6 drill rigs currently operating at its ongoing resource expansion program and advancement of new regional targets on its flagship Lawyers Gold Silver project, located within a road accessible region of Golden Horseshoe. Now, Golden Horseshoe is this horseshoe-shaped space in British Columbia that is known for a lot of gold and silver mines, gold specifically. So it's in an area of geology they know from the past has been very prolific. They're in that Golden Horseshoe. The company is nearing completion of a comprehensive geological reconnaissance program consisting of rock and soil sampling, mapping, and geophysics. These are the earlier stage exploration processes. Rock sampling is picking it up off the ground, chiseling it off of an outcrop. Then you've got metallurgical and geophysics, which is you look at it from the top down, you do your metallurgical studies, maybe you're doing magnetic imaging, whatever the case may be with drones, whatever that is, they're figuring out what it is. And so you get a chart like this, which is very colorful, and geologists look at that and say, I want to go here, or I want to go here, or ooh, look at that, let's go look at that. So this is where they decide where they're going to stick a drill rig on the ground and go, you know, and pull a sample out to see. Maybe it's in this purple zone, maybe it's in this red zone, maybe it's along this little strike area they see here. I mean, you never know. It's up to the geologists, but they're doing all that work. So they're doing drilling and other exploration work to increase their targets and to build the resource. Here is drill results from the Cliff Creek mid zone. Pretty good drill results here. You're seeing silver 5665, I'm sorry, gold 56.65, silver 79.75 parts per million, and the gold equivalent is 57.65. So some pretty good numbers in some of their drill results. I want to show you Cliffs Creek. These are the areas in which they're drilling out. Here's the basically the areas they're looking at. You're looking at it sideways, so they're putting holes through this area right here, this red area right here. They're just going boom, 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 boom through there, and they're getting some good results. Here's 21.34 meters of 9.59 grams per ton. Let me make this bigger so you guys can see it. So right here, 21.34 meters at 9.59 grams per ton in this drill hole through this resource, okay? This is 33 meters at 0.81 grams per ton in this drill hole through this resource. So we're laying it on its side, and then you're, so you can see it horizontally, and then they're sticking drill hole through it, and they're saying, ooh, got a bunch here, got a bunch here, got a bunch here. And that's how they outline the resource. And lastly, they exercised warrants as a 100,000 meter drill program will lead to resource expansion. So the overall drill program is 100,000 meters. So I've taken you from small to large, and now we're blowing it up at the big level. But what's important here is that the companies invested in Benchmark see the results, and they're like, buy more. That's what a warrant is. A warrant is an option, to take that share at a certain price. And as they're doing their drill holes, listen to who's investing in Benchmark. 100% of the 10 million share purchase warrants that were due to expire on September 23rd and October 7th have been fully exercised. Producing them with $4 million of working capital goes into the treasury for what? More exploration, including Eric Sprott's exercise of 6.7 million warrants for a purchase price of $2.7 million. Eric Sprott remains the largest single shareholder, controlling 14.8% of Benchmark's outstanding common shares. Big boy in there likes the results, put another 2.7 million in. That's not nothing. That's huge. There are other people as well. Eric Sprott is the biggest one, but there are other companies and large investors investing in this, and they like what they see. And when you see that, that's a positive sign for you. So going back to their chart, are you worried about this price drifting a little bit while they do their drilling? No, that's normal. But when big guys like Eric Sprott are putting $2.7 million and exercising those warrants, all of a sudden you can see a serious investor is serious about Benchmark. Why? Because of all the results that we told you in the news. All right, last one is O2 O2 operates, as you may remember from our video, in Colombia. Now, Colombia is a very prolific producing gold and silver. And these guys at O2 are aligned with the gentleman that's done most of the major gold finds in the last 20 years in Colombia. So they're aligned with the people that are finding it, and they're in a prolific region. Now, again, year to date, their prices are trading down. We're seeing that in all the exploration companies because gold and silver was sideways trading for the most part between 1680 and 1820 for the last year and some time. So they're going to drift a little, but that's okay. Why? You dollar cost average as they go down and get in cheap for good companies. So what about O2 Why is this a good company? So essentially, they've got some news here. They're doing ground geophysics. Now, remember from Benchmark, geophysics is all that stuff you do to get the pretty color charts so the geologist can look at the pretty color charts and say, I want to stick a drill hole here. I want to stick it here and here and here and here and here. Okay, that's what the pretty color charts give you. The pretty color charts tell the geologist, let's go punch some holes in the ground and see what we got. So it's an early phase of exploration. The ground geophysical survey allowed the interpretation of 650 by 500 meter area with an anastomosed vein pattern, which already been identified. In other words, they're identifying the veins in the ground. Let's translate that to English. At least 4 different vein directions were identified, including the vein from the 𝙂𝙊𝙇𝙍 mine, past producing mine, where channel chips with values up to 42.3 grams per ton gold have been collected. Channel chips is you look at the channel of that vein and you chip it off. It's like a sample, and you say, and you have that analyzed, and they saw 42.3 grams per ton gold. That's pretty darn good. You can mine at surface 0.5 gram per ton gold and make money in most places. They're looking at 42.3. So depending on how deep and all that stuff goes, and we'll know as they continue to outline it, that could be extremely profitable for investors. So good stuff. So the previous work reported in the company's 43101 recorded multiple entries from artisanal mines in different veins in various directions showing mineralized systems. So in other words, they're looking at a previous 43101, those regulated reports, which have to be up to standard to show that the resource is there. And they're using that to guide their sampling programs to say, let's go target stuff. And here's where they're targeting right here from the 𝙂𝙊𝙇𝙍 mine. This is an old mine. They're targeting all the artisanal, back in the day before all mechanization, industrial revolution, You had artisanal or people mining where they took a pickaxe and they went clank, clank, clank on the wall. A big rock dropped off. You looked at the rock and you said, I think that's enough gold. And you washed it and polished it and everything, and you have a little chunk. Well, now with modern mining techniques, you can get it a whole lot cheaper per ton. And so they can go after stuff that used to be artisanal mined. And there's still a lot of it that you wouldn't do if you're just a person with a pickaxe, but you can make a ton of money. Everybody's doing this. This is the way mining is done now. Here's a really good report from October 4th. O2 Gold intercepts the main Aurora vein. 19 grams per ton gold increases the vein depth. How deep that vein is, that's good. The deeper that vein is, the more gold is there. And updates exploration from brownfields. Brownfields are where there's been previous mining. It's not a green field. It's not completely virgin. There's been previous mining in the brownfield, and they're just bringing that resource up to date. Great way to find gold and silver or any mineralized system nowadays, because you're going where there's previous work. You have modern mechanization. You're going to go grab the rest of it. It's highly profitable. So drill hole ARU21002 right here, located 100 meters north of the other hole, 21001, intercepted the main Aurora vein and showed the following result. 0.7 meters of 19.26 grams per ton gold and 10.5 grams per ton gold between these two areas. The gold silver intercept of hole 21003 was between 159 and 16, equaling 2 meters of true thickness. True thickness is how thick is that actual vein. It's not all the rock around it. You say, well, we measured it over 7 meters and we don't know how much of that rock is actually gold because we haven't done enough drilling. No, they're saying it's 2 true meters of width. 2 meters is very good when you're talking about 19.26 grams per ton, not bad. So the company's drill program is expected to expand its nearby brownfields of Abra Silver and Quintanillo, where ongoing exploration work has identified 9 veins, one with projected extension. So in other words, all these previous workings were there from an artisanal perspective. They've identified 9 veins in the zone. They can go bulk mine, and now they just got to drill out and find out what the total resource is. So you can see on the map, they've got it all documented for you, all the pretty lines which you can look at, and they show you what they found. Now they've done something else. They're strengthening the balance sheet. So they have exchanged, or they've settled a debt for drilling with shares. So they gave the drilling company some shares. Now the drilling company is now invested in this company, invested in their success, and they get rid of the debt. They get the debt off the books. So $176,000 of outstanding cash indebtedness was exchanged for 800,000 of its common shares. So this is a way through barter or through exchange like kind that companies can exchange their shares for work done. And yes, it's slightly diluted, but what it does is it signals that the company that did the work says, I did the drill work. I'll take those shares because I know you're going to be successful. So this company who did the drill work is taking the shares because they'd rather have the price appreciate in shares. They know it's coming because they did the drill work to see the resource rather than the cash now. What does that say about how the driller who's helping them find the resource feels about O2 Gold? They feel very positive. Okay, so these are companies we looked at, various stages of early exploration. O2 and Abra Silver, a little bit earlier stage. Benchmark is a little bit more advanced, but they're still what you consider exploration and development companies that are at that part of the supply chain I've talked about on this video, which are so important and are going to get that flood of money. When the stocks collapse, okay, which they will, we've talked about this, price to earning ratios are almost at all-time highs. And as they get to that last quintile, up above 80%, they're sitting 80% right now. The S&P 500 index is sitting at the 80th percentile of the highest stock valuation ever. Once it gets into that last quintile, that last 20% above, 80% to 81 to 100, what happens is that guarantees throughout history, or at least if you look at history, that shows you it's going to crash back down through the historical mean and back down to single digits, meaning translated for the non-stat heads, a little bit longer, one more melt up, and that stock market's going to go bam and crash, just like it did during the Great Depression, just like it did during the tech crisis, just like it did with the Lehman event. But it's going to be bigger this time because the numbers are bigger. Okay, the bigger are, the harder they fall. When that happens, all that money is going to flood down to value in that supply chain. Where is it going to come? Remember, there's only so much physical precious metal above ground. People are going to go for anything of value. As the stock market crashes, pressure comes on the bonds. Okay, pressure is going to come on the dollar. Where are people going to go? They're going to buy precious metals, but people are going to want to use their equity. They're not going to be able to get all their equity out at once. They're just going to switch from one company to another. It's going to go from those overpriced P/E ratio companies at the end that got too much of that passive investing cycle that bid them up to all-time highs, and to flood down that supply chain to these mining companies and to the people doing the exploration, and even to refiners, because refiners are going to have to grow to produce all the stuff coming out of the ground that the world is demanding. Those first 3 steps of the supply chain are what should be getting your attention right now if you're looking to buy low and sell high. Now, if you want to buy high and sell low and guarantee a loss, go buy shares of Tesla, valued at over $1 trillion market cap, that only made $2 billion in the last year. In the last 5 years has lost $3 billion on top of making that $2 billion. So they're net negative the last 5 years. You want to go invest in that? Fine. You're going to buy high and sell low if you hold it long enough. You buy over here, you buy low, sell high. That's the way to be successful. And let's look at that part of the supply chain we're talking about. As we go back to the video, let's make this full screen. We're talking about what nobody's talking about, which is where you want to be invested when you're cycle investing. It's not the shipping, the ports, and the trucking companies. It's exploration, mining, and refining. That's the value end that's going to be so leveraged upon, 1, all the goods that people are demanding, and also 2, where all that money's going to flood when that next big crash comes. So position yourself, buy low, sell high. Now, again, do your own research here, but I think I provided you 3 really good targets. And I think I provided you an investing rationale that if you invest over time and you're not a day trader trying to make 3 cents on a trade and staring at a screen all day, which is not the majority of you, you want to get into value investments and buy low and sell high and have generational opportunities at investment returns. And you also want to support, the world that's going to need more resources, because you're part of that. And if there are not enough resources, we're going to have a tough time buying stuff, and inflation is going to get worse, right? Those 2 reasons. I think I provided you the good case here. I think I provided you the good investment case. And I think I provided you the good social case that we need to support the goods that we need every day, or else, bam, we're going to have even higher inflation. And we got, that's where we invest, the beginning of that supply chain that nobody's talking about right now. When everybody's talking about it, that's not when you want to invest. You want to take your position earlier. So that's what we talk about on Mondays, guys. I give you good investment thesis, teach you about how the market works. I tell you about things nobody else is going to tell you, and I'll bring you some targets to at least think about and do your research on. Abra Silver, benchmark metals, OTGO.V. 3 choices. Certainly we do a lot. Now, here's where I wanted to talk to about, if you want to know more, we do, for those that support us on Patreon, and thank you for everyone that does, have a tier in that system. It's the mining stock tier. If you want to look at over 30 targets that we have right now, which is expanding to 50 by the end of the year, we have a list for you. We have what we like about them, what their good and bad parts are, and we write a review, and we put it all into a big spreadsheet for you guys. And so we cover even more. So if you guys are interested in investing in that end, we do have a service that will allow you to do that. And if you support us, you can, participate in that service. So, but for those of you who are just looking for some good investment ideas, stay tuned to the channel on Mondays. We're going to bring them to you. That's what we do. We're trying to bring ideas to help you invest, to live a richer life, and also to address the issues that we're seeing, but at their core, not the surface level, what the news is talking about, at their core. So from a society perspective, we have security in our supply, security in our goods, security in our lifestyle. And that's what we do, why we do here on Mondays. I wanted to connect all those dots for you so that you would understand what we do here at Gold Silver Pros. Thank you, everybody, for joining. This has been our Mining Stock Monday presentation on the supply chain and some good investment targets for you. Till next time, this is Rod Keens with goldsilverpros.com. Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.